Good morning and welcome to MarketCast 23 on a misty, moisty, grey, wet, middle of July morning here in Bournemouth, the sunshine capital of the UK. I'm in the AF Oliver offices waiting for the sun to appear, but I'm hoping I've brought a little bit of sunshine to this MarketCast by my choice of shirt today, a conservative little number. And I use that not in a political sense, but I felt it gives a little bit of sunshine and a bit of warmth. Got a lot to do in the next 30 minutes. Let's get the show on the road. I've even got a clonker that works. So it saves me, if you were watching MarketCast 22, rushing behind the screen every few seconds to change the slides. Why the big pause? Excuse the pun. I've never been able to resist a good pun, or even a bad pun actually, but we are suffering right now in a market that has slowed down. Not necessarily in terms of value. In fact, the way that values have held up over the last 3 months has actually surprised me. But what has happened is we've seen a slowdown in sales rates. Why? Well, we've been hit with a triple whammy. Interest rates, and we'll go into interest rates in more detail during the course of the MarketCast here this morning, but interest rates are almost definitely going to fall before the end of the year. Might not happen on August the 1st. I think the chance of that is no better than 50-50, but they will fall before the end of the year unless some geopolitical event actually changes the whole world, stands it on its head. So never say never, obviously, but if all else is the same, then interest rates will fall, and buyers know that. So if I'm in a position where I can pause and wait, why would I want to fix a rate at around 5.5, even 6% right now for 2 years, when I know that if I can hang on to the end of the year, my mortgage rate is going to be lower than that? Pause number one. Pause number two is an election. Now, I know the election has happened, and we'll touch on the politics in a moment or two, but the big issue is that in every incoming government likes to change the rules, don't they? They make those changes, make it evident why they were elected, and the Labour Party, this Labour Party, will be no different. In fact, might even be more so, given the size of the majority that they are going to enjoy over the next 5 years. Canny home buyers know that that's going to happen. And so on one side of the picture, they might be hanging on, particularly if they're FTBs. The Labour Party have stated their intention to support FTBs, first-time buyers. They may well be hanging on to see what goodies follow the appointment, or the election rather, of the new government. And equally on the other side of that coin, if people are thinking about stretching themselves financially, they might just want to wait and make sure that they don't get caught out by a major change in taxation or policy. Pause number two. And then, of course, we're in the middle of summer. You can tell because it's pouring down with rain outside. It's obviously summer. But we know, naturally, if you follow the pattern of the UK residential housing market, it has, well, residential and housing, they sort of go together, don't you? Know what I mean? It has worked that way since time immemorial. And so we've got the summer pause too. Triple whammy pauses. So one of the toughest jobs to do when I try and put MarketCast together is to come up with 3 words. I don't even know why I created this rod for my own back. Heaven only knows why. But I try and find 3 words that, if you like, give you an overview, as I see it, of the market. And I've sort of cheated here, because I've used the word worried, but what that actually really means is the fear of missing out. So potential buyers are worried that if they move now, they're going to miss a better deal that's going to be coming down the line. And I guess you could argue that that feeds into this hesitancy. That's pause number 2, really, the political one, that hesitation, that concern that they might make a move, and then suddenly, just as they've set themselves square, somebody moves the goalpost behind them. So there's a hesitancy there too. And hopeful. There is no question about that. Look how values have held up despite so many people, so many commentators, informed commentators, saying it was going to happen differently. There is definitely an underlying hope in the market too. And when I show you the consumer confidence numbers in a moment or two, you'll realize that that is borne out by the facts. if you want to call market research facts. I think, quite honestly, consumer confidence numbers come as close to any as a really good reflection as to what the UK population is thinking. So, just to give you the briefest of backdrop to do this morning's presentation, interest rates are going to fall before the end of the year, unless something dreadful actually happens, and Labour has big plans for the house building sector. Our job this morning is not to second guess how those housing plans that Labour set out what they're going to be, but much more about how the market's going to react. It's a fact that the vast majority of the audience watching these market casts are involved in the sales side of the house building industry, and your concerns are not so much about which particular acts are going to be brought in during the lifetime of this parliament, but much more about the effect that they're going to have on the sales side of the market. Two concerns really. Number one, how is it going to affect values? Number two, how is it going to affect volumes? And then there's the two concerns. And equally, what are our solutions going to be to try and counter that and make sure that we maintain on target to meet our forecasts? Inflation stays at 2% on the last check, but we've got that core inflation sitting in there, haven't we? We've got that CPIH core inflation sitting in there, and the government now, and now the new government and the new Treasury, what they like to do is they like to say, having given us all a target of 2% RPI, they then like to say, do you know what, we're going to strip out of that all the volatile bits like tobacco and like energy, and we'll look at that, we'll call that core inflation, we'll take a look at that, and that is being particularly sticky. More of that in a moment or two. Confidence barometer I'm going to come to in some detail, and the nationwide index against all the odds continues to rise. And I truly believe that nationwide would actually be just a tiny little bit in negative this month, but it still sits there in positive growth. We'll touch on these in a moment or two. What is important is the way that interest rates are going to move. We'll have a look about the decision that the MPC are going to make when they meet on August the 1st. But what is clear, as we look at the snake of the average range of mortgage rates available here for a 2-year fixed, which currently sit, and don't forget the nationwide now have come in under 5%, but you can see where they currently sit. This is 6% level here, and that top line there is a loan to value of 95%, down to here, just under 5%, loan to value of around 60%. Then when you look over here at 75% loan to value over different fixed terms, you can see those two sit between 5 and a bit and 4 and a bit. That's where mortgage rates are sitting, but we know the trajectory is downwards. More importantly, so do prospective home buyers. That's a really important thing to consider. And so is the political picture too. Our new government with a huge and stonking majority. The King's Speech week before last, they set out the fact that they were going to focus and they were going to help with first-time buyers. They talked about building better and more beautiful, higher quality, sustainable developments. They talked about reforming the NPPF, the National Planning Policy Framework, reintroducing mandatory targets. Thank goodness for that. One of the worst things that happened in the dog days of the Conservative government. And then they say they're going to oversee the building of 1.5 million additional dwellings over the next 5 years. Well, it's a very easy number to say, isn't it? 300,000 units a year. Let's see if they do it, because we're not just talking about the supply-demand side of the equation. We're also talking about having the resources to be able to do that in terms of raw materials, skills, and all the other things that we all know about so well. But the one thing I would say is we've got a new housing minister, obviously. Quite honestly, we've become used to having new housing ministers nowadays. But this guy here, Matthew Pennycook, new housing minister with the new government, obviously, but he has been shadow housing minister since 2021. Now, you might be interested to know that the Conservatives, or the leadership of the Conservative Party, as part of their efforts to vitiate their entire party mechanism and system, appointed during the time Matthew has been in post as shadow no fewer than 6 There's Chris Pincher there. He was 2 years in the job. Look, Stuart Andrew, 5 months. Oh, Marcus Jones, 3 months. There's Lee Rowley, first time round. He only did 2 months. Lucy Fraser over there, 5 months. Rachel McLean did an extraordinary 9 months. In fact, I actually got to see Rachel speak at the HMIC. I feel really sorry for the organisers of the HMIC when they're trying to get, can you imagine, in those last few years of the Conservative government, trying to persuade the housing minister to come and speak at your conference? It's like trying to shoot a moving target, isn't it? The housing minister changes every 20 minutes. So, yeah, could you come and speak? You know, it's November. Could you come and speak? Yeah, that's fine. But I've just left. Thank you. And then, of course, down at the bottom here, there's Lee again. Look, there he is, looking still as happy as he did when he was initially appointed. So in November 2023, he was appointed. And, of course, he's lasted the 7 months in between then and the election that happened the week before last. So the Conservatives actually managed to appoint 16 housing ministers since 2010, which is quite extraordinary. Grant Shapps, I think, was the first one of those in 2010. And since then, there have been 15 more, if we count little Lee Rowley there. I don't know why I called him little Lee Rowley. Lee Rowley there as 2 and not 1. And that sort of demonstrates to me how seriously they took that portfolio, they took that brief. Coincidentally, by the way, 16 housing ministers, that is the same number of interest rate rises that we've had since December 2021. Just thought I'd throw that one in as another fact for you. Hopefully, with the arrival of Matthew, who is very familiar with the brief, very experienced now in terms of, if you compare him, I think that makes him, if we take that as somebody holding that portfolio, it's the longest. I went back years and years and years, couldn't find anyone that's been in the job that long. I think that sends a signal about how important they believe that is going to be. Okay, so let's have a quick look at how the press, the media are seeing the market right now before we get into the detail. Very briefly, generally, there is a confusing picture out there depending on whose press release comes out next. Is it the Zoopla press release here? Is it the Rightmove one here? Is it the NHF here? There are all sorts of different views, and the lazy journalists tend to pick up the first release that come in and then print them. So here we go. Number of agreed UK house sales up over 15%. That's from a Rightmove release. Race out of recession picks up, house prices fall as mortgage time bomb. Yeah, these are all, so you can imagine if you're a consumer reading these, it's very confusing. But overall, generally, the coverage right now, if you scour through, the coverage right now is pretty positive. But this is from the Rightmove release as well. Interestingly, look, so that's from the Rightmove press release. And so is that one there. Look, house prices fall 0.4%. Wrong. That's absolutely wrong. Asking prices, there we go, fall 0.4%, but sector confidence is rising. Now, how interesting is that? And the BBC has weighed in, as pretty much every single national title did, with a lender offering mortgage rates, and I think it was nationwide, below 4%. If ever there is an idea, quite conversely and ironically, that sort of headline doesn't help, because it just extends that pause, because it just makes more potential buyers say, we need to wait until that arrives. So that in itself is a big deal. A quick look at the key dates, like we always do, because this helps us then think about ultra short-term prospects. Inflation figures, well, we just had them out, didn't we, the week before last. So the next one's come out on August 14. Fingers crossed for that one. I don't think we're going to see any of the huge moves that we've seen. Before then, we've got the next MPC meeting on August the 1st. With this core inflation element that we've got going on, I think it's unlikely that we're going to see a rate. If I was a gambling man, and I like the odd flatter every now and again, but if I was a gambling man, I would probably put the chances around 50-50 that we'll see a rate cut. We will certainly not see a rate rise on August 1st. I think it's likely to be the meeting after that we see that. So in terms of the key data, I love starting with this chart, and you can call me sad, I don't care. I love this chart so much because it gives you just the very best single glance indication of exactly how the market's moving. And for those of you that are in the industry, the situation that you are facing and your people are facing at the front line. Look, Here we go, this grey here, the grey on that chart. So here are 100%, this is Property Mark that produced this data. They stopped producing this chart a few months ago. I've carried on doing it. I grabbed their data and produced this chart. But it's a brilliant chart. All their member agents send in the number of deals that they do at worse than asking, at asking, and above asking. The blue is above asking. The orange is at asking, and the grey is below asking. This was the peak. Spring 2022, April 2022 was the very peak. Look at that. 40% of deals were being done at above asking price. Extraordinary. You have to go back to 2008 to find something like that. And the grey here is just a tiny little fragment of people that were managing to get a discount off the properties they were buying. And if you want to know when the change came, look at this. Look at this. As the effects of those interest rates that started in December 2021 started to bite, and you can see that the grey growing as much as it is in my hair, and the market changes completely until we got to the really difficult point in Q4 2023 last year. Remember how tough it was in the final quarter of last year, and I think that was the base of the market right there. This is a really good way to get that macro view of how the market is actually moving. And look at this. You know, forget the odd outlier here. That's obviously January. That's always going to be a bit of an outlier. But look at that trend there. These are the May numbers. They're the latest. Next week, we'll see the June numbers. But you've got almost 10% of deals right now are being done above asking. That in itself is an extraordinary fact. And you can see then that the next 18% there are being done at asking price. And that is growing as the market changes. I want to share just a couple more charts on this. I've stripped away all the colours here so you can better see the trend of deals being done at or above asking. This is where we're headed. It's not helping us on volumes, of course. Come to that later, but we've got our pause, our triple whammy pause, our big pause going on. But one more chart that I really wanted to share with you, that not necessarily relevant to the short-term market movements, but look at this to give you some idea. I know that's a bit of a dramatic heading to put on a slide, but the system is killing us. This is the amount of time it takes to get from a sale agreed, a deal agreed, so offer accepted, to exchange of contracts. This back here, this is 2015 back here. Up here, May this year, 2024. The blue bit there is 17 weeks plus. 17 weeks plus over 4 months. The green in here, 13 to 16 weeks. The grey, 9 to 12 weeks, and then you've got the shorter ones. This is 1 to 4 weeks down there, and 5 to 8 weeks in there. But look, if we go back to 2015, the vast majority of deals were being done within a 12-week window. And look where we are now. Look at this. The vast majority of deals are taking over 13 weeks, and lots of them, a third of them, over 17 weeks. So we have to work as an industry, we have to work really hard at that. I know lots of moves afoot at automating information exchange and what have you. Won't get into that in the MarketCast, but believe you me, this is an issue that we need to face. So where's the market going next? And let's have a look at some of the key data. Let's have a look at how people are feeling. This is a year ago market matrix. This is where we've moved to now. And one of the important things, rather than me go through all of these things on here, one of the most important things that you can see on this chart is really important is the way that all these things are coalescing along this neutral impact line here. Some moving back here to very low impact, some having a higher impact, but generally neither a positive nor a negative effect. And that is the market we're in right now. It's what I will call, it's what I'm going to term a vanilla market. There's an opportunity. And I believe that for sharp-nosed, sharp-eyed, brave marketers, there is an opportunity to steal share because we've got this vanilla effect in here. Still sat up in this top right-hand quadrant. So the quadrant that says positive effect and higher impact. This is where we would love things to be up here in blue because it's in your gift. So in here, part exchange, financial products. Financial products, hugely important at the moment. Come to those later. And obviously price reductions, discounts, of course, as well. Here's the consumer confidence chart, well worth spending a couple of minutes on, even in this febrile 30 minutes that we share once a month at MarketCast. Quick reminder then, here's the zero line in here. Anything below this line, this is the people of Britain saying, I think things are going to get worse over the next 12 months rather than better. Anything above that line, I think they're going to get better. The red is the overall index line here, and it continues to climb, and it continues to come back to this neutral position from record lows. This is a survey that's been run for almost 50 years, and you can see it's like so incredibly consistent, a very, very reliable and an extraordinary bellwether for the way that the market's going to move. I use this to underpin my thinking on where the market's going in the medium term, and it never lets me down. Red line, overall index. The blue line here, how's UK PLC going to do over the next 12 months? What's the economy going to do? That's up to here, still in negative, but the highest point here since COVID. And the most important thing is this data was collected between the 1st and the 15th of July. So this was while the election was going on and just after it. So it'll be really interesting to see what the August numbers look like when the results are clear and we've actually seen the opening gambit of the new government and where that confidence goes there. But importantly, look at the green line, which is the climate for a major purchase. Is the next 12 months going to be a good time or a bad time to make a major purchase? Still well in negative, but look where it's come from. And if I took you back before there, back to 2022 and back to the Truss Kwarteng bonkers mini budget, that was, well, you actually had to get a plane down to Australia to see the bottom of that line. That's how deep it went. And you can see now we are approaching that neutral point. And still, with its nose poked up into positive here, that's been there since March, how are your personal finances going to fare over the next 12 months? Are they going to get better or they're going to get worse? And you can see that people have a faltering confidence in their own personal finances over the next 12 months. So that's really important. Let's take a quick look at the indices. This is Rightmove. Rightmove for July. Asking prices came back minus 0.4%, virtually didn't move. Let me tell you, by the way, that the average over the last few years for Rightmove from June into July is minus 0.2. So that's actually twice the long run average of how prices move as we move into that summer selling period, the one we talked about earlier about how it's a sort of slightly suppressed selling period. Average asking price now over the 12 months, just fractionally 0.4 of a percentage point above where it was last year. But the number, and this is that headline I showed you just now in The Guardian, do you remember? So the number of sales being agreed, 15% above where it was this time last year. So, and that's of course one of the big facts that all the press have pulled out. Nationwide, plus 1.5%. Surprised me. I prefer to take a look at the 3-month on 3-month index. This is a much better way of seeing the trend, and this takes out all the little blips, and this is where we're going 3 months on 3 months. This is my Diplodocus shape, and I am, even though we got good numbers last month, I'm still convinced that the Diplodocus is the right way to go, and I've moved him back again a little bit this month because the market is still not moving back quite as quickly as I thought. But quite honestly, at this stage of the game, the numbers are so small. You know, what we've got is this neutral picture, but we all hate averages, don't we? Especially any business that's operating on a national basis. What's the old saying? If you take a man and you stick his feet in the fridge and you stick his head in the oven, is he, on average, comfortable? And we all know he's not, because quite honestly, the people in the south and east who've got their feet in the freezer, and the guys up in the north and in Scotland and Northern Ireland who've got their heads in the furnace know very clearly the difference in averages. If you look at the nationwide regional index, we go from over plus 4% to minus 2%. A 6% difference in price movement between regions. The message there is micro-strategy. Micro-regional strategy. Do not do a one-size-fits-all. Because you lose off at the top, you miss the opportunity at the top on those good markets, and of course you run the risk of really faltering at the base of the market too. Halifax, almost identical there. You can see quarterly change, annual change, plus 1.6, nationwide plus 1.5. I've never known them be quite so close in tandem. And of course, then the Zoopla index, which is that lovely amalgam of asking prices, mortgage approvals, sold prices, 0. They've got it absolutely flat right now. I'm going to race through some of this slide I think is always worth a quick look at. Buyer demand from Zoopla up 6% over last year. Sales agreed up 8% over last year. Flow of new supply up 4% over last year, but the stock now is almost 20% higher than it was last year, which is a good thing. That greater availability brings more fluidity to the market, and that can only help. And when you look at the UK, all it needs is 5 seconds of a glance, because you can see that everything pretty much from the wash northwards is in green, in positive growth, and then everything coming south from there is in negative growth. Remember the diving board. Remember the diving board? Inflation numbers we've already touched on. So here we are stuck at 2%. But this owner-occupier housing costs in here, plus 6.8%. This is this sticky inflation that is actually making the MPC pause, hesitate. They're joining on the pause wagon too before they drop interest rates. Mortgage approvals fell in May, which was a real disappointment to me, because I thought we'd see them tick up slightly, down to just about 60,000. Generally, May, if you look back over the average numbers, should be 66, 67, 68,000. So we're still struggling on volume, but we will do above 1 million this year. Here's the Zoopla chart that shows that that's going to be the case. And I thought this was a really clever chart from Zoopla as well, by the way. So this here's the 20 years average, 1.2 million is that dotted line there. And you can see how it's all gone on. This was that classic 2014 to 19, rock solid, nailed on. And here's 2024, their deals in mauve completed. These are sales agreed, not yet completed in black. The green bit are deals yet to be done. Isn't that interesting when you actually think about that with the time scale that it takes to go from sale agreed to exchange of contracts? You can see where volumes are. That's just endorsing what I've just said. Not going to dwell on that. And I'm not going to dwell too long on the RICS other than to say, look, here's the June survey. Here's the up and the down, pretty much exactly as you saw on that on the UK map, with the areas in north and northwest doing well, and southeast particularly doing poorly. And that applies to level of new buyer inquiries and the regional prices over the last 3 months. And then when you look forward, these are sales expectations over the next 3, that's the mauve bit, and 12 months. Pretty much all the agents believe that we are going to see an increase in volumes. Regionally, you can see you've only got the north there that's actually being a little bit negative. Remember how low the sample is in this survey, by the way. So you need to take all of that into consideration. And then when we look at prices, well, these are the expectations. Even that 3-month price is actually in positive, which really does surprise me. But 12-month, I think everybody believes now, certainly the surveyors believe, that we are going to end up the year in positive growth. And then when we look at the regions, well, that shows pretty much a similar picture to we were talking just now, with that geographical split north and south. So what does this mean for us in the second half? This is the actuality. So the dark blue bars are the nationwide index. These are the actuals. The light blue bars now are my slightly adjusted forecast as we go into the second half. I'm staying with my 0 at the end of the year. I am staying with my Diplodocus theory, and I'll bring Diplo on. We've just about got time to do that. Go on, you get. And those sharp-eyed ones amongst you that watched MarketCast 2022 will realise that I've tugged him back a little bit, because basically I believe I've just got the position of the head in slightly the wrong place. I had him a little bit too far forward, but I do believe now we are sliding down Diplo's neck, and I think that we'll see that over the summer. Only time will tell if I'm right, but if I am, and I strongly believe I am, it means that the tail will be Q1 2025, and that says opportunity writ large for everybody. So in summary then, as we run up to our 30 minutes, market is difficult. Buyers are pausing. We've got the triple whammy pause going on, and that needs to be addressed. The inflation is fallen to the government's target. We've still got this core inflation going on. Next MPC meeting, no better than 50-50 chance of a rate cut, so be ready for that. I think that the changes that the Labour Party are bringing in, they're talking about for the first time buyer help, they're talking about the mortgage guarantee scheme, mortgage indemnity scheme. It's never worked particularly well, has it? It's never really delivered major volume, and I don't think it will do now. But I think their supply side changes will have a big effect, but it's going to take longer for that to actually feed its way through. So your strategy needs to be focused on FOMO, on the purchasers' fear of missing out on the interest rate reductions that they know are coming. So you can talk about fixed rates that you can subsidize below current market rate. I personally am a great believer in getting your IFAs in. There are some really good IFAs around the UK right now. Get your creative IFA in, get them working, make them attend the marketing meetings, and make them come up with creative ways to make the deal cheaper rather than the product. Maintain the power of the brand. Be more Swan. Look elegant above the surface and get all your IFAs paddling away underneath the water. So, and sweat your data. Sweat the databases. Think about doing it on paper rather than electronically as well, by the way. Okay. I think I've probably run a minute or two over. I don't think we did too bad really as a summer market cast. There will be no August market cast. We are going to have a well-earned rest, a well-earned break, but we will be back in September. And can I briefly say, if I've still got any of you tuned in right now, if you like the shirt, we've done 23 of these market casts. One of the 23 shirts I've already given away to a very engaging and lovely young guy who said to me, could I have one of your shirts, Matt, and made a contribution to charity as a result of me handing it over. 2 of the 23 I love so much I can never give away, but the other 20 we are going to be auctioning off for charity. So watch out, and a really good charity too. So watch out for that. It will be a bit of fun, won't it? It will be a bit of fun. Have a fantastic summer. Have a great selling summer, a super August. You'll get sunshine, I virtually guarantee it. Many thanks to James, many thanks to Hannah, who stood in heroically. Been 5 years with AF Oliver this week. Fantastic. Thanks for you for joining in. I'll see you in September.